Welcome once again to Who is This Loan Officer Person? A Disambiguation. Now, we're on episode 4, and as I mentioned last week, the issue is I had a 17-minute episode 4, and I got some pushback on that, so I've broken it up into its 3 component parts. As you might recall, we're looking at MLOs in national banks, MLOs in mortgage banks, and MLOs in broker shops. And today, we're talking about MLOs in mortgage banks. All right, so mortgage bank loan officers. So the licensing required here, as we discussed last episode, is state level licensing, and that means you have to be not just registered with the NMLS, you have to be licensed with the NMLS. So you have to take the NMLS required national course, and then you have to take any state required course and then continue with any state required documentation like bonds or errors and omissions insurance. The continuing education required is assigned by both the state and the NMLS, so you have to stay on top of that. I'm doing mine right now, about halfway through it. Got to get it done before December 31st. Programs. So loan officers that work for mortgage banks have often have access to a wide variety of programs. Their programs are based upon the relationships that their particular mortgage bank has with individual institutions such as Chase or Citi or New Res or, as I mentioned earlier, Pentagon Federal Credit Union, etc. So there's a vast array of programs. In addition to the mortgage banking programs, which again are funded in the name of the mortgage bank and then sold directly to the end investor after lien perfection and review, these mortgage banks can also have broker relationships where they are lending in the name of the broker relationship. And finally, territory. Loan officers that work for mortgage banks must be licensed in each individual state that they want to be in. And those licensing require their own individual continuing education. So, if you want to be licensed in a bunch of states, you're going to spend half the year doing continuing education. There are some states that don't require continuing education, but most states do. So it's difficult to be licensed in a whole bunch of states because there's lots of continuing education required. All right, what are the pros and cons of working for a mortgage bank? So you typically have access to a large array of programs. Typically, these are very mortgage-focused institutions, and so something along the order of 97 to 100% of their income comes from mortgages and their satellite businesses. As I discussed earlier, those can be things like escrow or signing services or homeowners insurance kind of thing. You can be part of a nationally known brand like Guaranteed Rate or what I'm trying to do here with Mason McDuffie. Loan officers operate in a largely independent fashion. There's no need to show up into the office like if you worked for Wells Fargo at a banking location. You would probably have to be there a certain number of hours per week. When I was looking at working for Chase, they were requiring you to be in the office 30 hours a week. That works for some people, doesn't work for others, certainly doesn't work for me. And then finally, you're typically able to innovate around your production tools and your marketing tools, et cetera, as long as you remain compliant. Oftentimes, mortgage banks have compliance departments where they want to review any marketing collateral that you send out. But as long as you're compliant, you're pretty much in good shape. Now, what are the cons? They're rarely a national brand. So Guaranteed Rate is an exception. Most mortgage banks would be unknown to anybody not in the industry. There's little to no internal referrals. Now, some mortgage banks, like Guaranteed Rate, for example, have programs you can participate in where you pay for leads, but these aren't internally generated leads as such. They're more externally generated that you pay for them, even if Guaranteed Rate, for example, owns the telemarketers generating the leads. They have to abide by correspondent broker lending contracts, and that can be really painful because if, for example, a customer refinances the loan that you did for them within 6 months, you're going to have to pay that commission back. So I always tell my folks that I'll start looking for new rates for them within 4 months, and we can lock it out for 60 days and get it closed. But if they must refi, do it with me because at least it'll be a break even for me and it won't take money out of my bank account, which is what happens if the thing gets paid off early. They have to be licensed in every state, like we discussed on the other side. You know, doing all of that continuing education is a pain. That's point number 5. Actually, they have to complete a ton of continuing education. And they're also subject to this like cumbersome, esoteric process of NMLS licensing. That's kind of a pain. This has been episode 4.2 of Who is This Loan Officer Person? I hope you enjoyed it and learned a little bit about what I do for a living, which is a mortgage bank loan officer. And the next episode, we're going to be talking about what a broker loan officer is and how that works. So leave comments if you want to have me answer any questions, or just email me back on this email, and I'm happy to answer any questions you might have. Any questions you have about mortgages, I'm your dude, 650-288-8170. We'll talk to you later.